If you've ever had a malpractice application declined or had coverage non-renewed, it can be worrisome and frustrating. But don't worry, it happens. And in today's market, there are coverage solutions for nearly every situation. Whether it's rebuilding your practice after a licensure issue, recovering from several adverse claim events, or looking for insurance for a unique type of practice. The non-standard malpractice market has more options than ever. In today's episode, we're going to give you a crash course on the non-standard malpractice market, explain why doctors end up there, and discuss how you can move forward with confidence. Welcome to Malpractice Insights, the show dedicated to helping healthcare professionals understand medical malpractice insurance and providing you with the solutions you need so that you can get back to the work of practicing good medicine. My name is Jennifer Wiggins, CEO of Aegis Malpractice Solutions, and I'm so glad you've joined us today. If you're new to our channel, welcome. We're so glad you're here. We release a new episode every week, both on YouTube and your favorite podcast streaming platform. So be sure to like and subscribe to stay connected. Just a quick reminder before we jump in, we're here to provide general information on medical malpractice insurance and related topics, but not specific legal or insurance advice. So if you have a question about your practice or individual coverage needs, be sure to ask your agent or legal advisor or contact us at aegismalpractice.com. That's AEGIS malpractice.com. We'd be happy to help. So let's start by talking about the difference between the standard market and the non-standard market. Standard market insurance companies are admitted carriers, which means they must comply with the rigorous rules and regulations set by the Department of Insurance, or DOI. Their rates, business practices, advertisements, and financial condition are closely monitored by the state, and any changes must be reviewed by the DOI for approval. Standard market policyholders are protected against company insolvency through the state's guarantee fund, which steps in to cover in the event that a carrier becomes distressed or goes out of business. Standard market carriers generally have a traditional underwriting approach, and they prefer to insure lower risk physicians and medical groups. Non-standard market companies, also known as excess and surplus lines or E&S carriers, are not admitted and therefore are not subject to the same rules and regulations from the DOI. They can set their own rates, offer different terms, and take business that standard market carriers may shy away from. Although their policyholders are not protected by the guarantee fund, most non-standard market carriers are financially stable and have the backing of reputable reinsurers. A physician may need to obtain coverage through a non-standard market carrier for any of the following reasons. Claim issues. Maybe they've had too many or they've had some high claim payouts. Licensure issues. Having a gap in their insurance coverage or previously practicing bare. Alcohol or drug issues. High-risk procedures. Practicing in a high-risk area. Or perhaps the carrier is simply not writing that particular class of business anymore. In order to write a policy with a non-standard market carrier, a broker or agent will have to show diligent effort in placing the business in the standard market first before they can access the secondary market. Usually this means obtaining at least 3 declinations in order to write or renew coverage in the non-standard market. The coverage that is issued through non-standard carriers is generally more limited in nature. For example, most non-standard carriers do not offer occurrence coverage. They only have claims made. And they typically have a hammer clause, which means the policyholder does not get consent to settle claims. Every carrier has a slightly different policy provision, so it's important to work with a knowledgeable malpractice agent to understand the differences between each coverage option. For most providers, coverage in the non-standard market is a temporary thing, and it's seen as kind of a rehab period while a provider gets back on their feet after an unfortunate event. Maybe it's just a series of bad claims or a substance abuse issue, etc. Most standard market carriers want to see at least 5 years with no claim activity and a demonstration of compliance before they're willing to reconsider a doctor for coverage. When a provider is able to transition back into the standard market, they will generally have to start over in their coverage, meaning they will have to buy tail to close out the non-standard policy before moving back into the standard market. Prior acts coverage is generally not allowed in this situation. For providers in the non-standard market, it is incredibly important to have a knowledgeable malpractice insurance agent working with you. Your agent can do the legwork to assess the market for you on an annual basis to determine what your real options are and obtain the necessary declinations, etc., to continue to get you access to the non-standard market or to renew your coverage. If and when it becomes possible for you to move out of the secondary market and back into the standard market, an agent can ease the transition and help you find a suitable option for new malpractice coverage going forward. If you have any questions on this topic or you want to make sure that you're covered appropriately, click the link in the description box below where you can connect with us via phone, email, or chat today. And if you're listening, please visit us online at aegismalpractice.com. That's AEGIS malpractice.com. We have some great episodes lined up for you in the next few weeks. I hope you found this one helpful. If so, could you do me a favor and give us a like and leave a review? And be sure to subscribe to our show so that you can catch our next installment of Malpractice Insights, where we're dedicated to helping you understand medical malpractice insurance and providing you with the solutions you need so that you can get back to the work of practicing good medicine. This is Jennifer Wiggins. Thanks for joining us.